Today on March 9th, 2020 was a historical day because of a 2,000 point drop on the Dow, and that is a record for the largest point drop ever. The Dow futures are up about 860 points, and even oil is up around $2.37 from its lows. So that's a pretty significant retracement there. Close to half of its loss is now erased, and that's mostly because, maybe partly because of a bounce, but mostly because of Trump talking about something big coming up because of this coronavirus and the stock market and all that, some kind of tax cuts or something big stimulus wise coming up soon. So the market is up in anticipation of that, but who knows how long that will last. And no matter how much money you throw at it, money doesn't kill the coronavirus, or even worse, it doesn't really kill the fear that people have of the coronavirus. So it's yet to be seen what's going to happen now. But this 2,000 point drop, even though it's a big number and it's a record and all that, point drop wise, percentage wise, this crash was only the 11th largest percentage-wise drop in the market. So let's have a look at all the top 20 percentage drops, and you see the number one is in 1987, the Black Monday crash, when it crashed over 22%, and that was 500 points only. Funny thing, you look at this chart, most of them are around 1929. There was a lot of big drops, and also in 2008 there were three 7% or better drops, pretty close to each other, 2 in November and 1 in December. I remember those. It seemed like every day the market was down 5-7% or something like that. So yeah, I definitely remember that. And curiously, the only drop that's that big that's in this list, the top 20, that's around the internet bubble, this is not even an internet bubble because it had already popped after this 2001. So this is after the September 11th attacks. And look at this. September 11 attacks, the market was only down 7.13%, and today we were down 7.79%. So I don't know what that's telling you. There's more fear in people about coronavirus than there was about September 11th. Not sure what that means, but it's something to think about. And I don't think we're out of the woods with this yet, so it's not like there's all clear signal to get back in the market, I would say. And even though we've dropped a lot from the high up here, if you look back down here, the sell-off at the end of 2018, the low was about 233 on the SPY here, the S&P 500 ETF, and we're not even close to that. We're at 275, 277 now. We're even higher now in after hours. But you look at that low from there to this top of about 339. It's about 40% run up in 1 year, which is pretty crazy, very crazy. It's almost, some people might call it a blow off top, where the market races up very quickly and then loses steam and then falls very quickly. I'm not sure if that's what we're in, but the coronavirus is definitely helping push it along in that direction. So even though we've come down a lot, doesn't necessarily mean that things are cheap here yet. Now, since this big crash started because of the crash in the price of oil, I guess you would figure that there's going to be a lot of bargains in the oil sector, and prices definitely are a lot lower today. Some things are 20-30% lower on the day, and what that means, of course, is that those stocks that are paying dividends, their dividend yield just went up a whole bunch because of those drops in their prices. So if you're looking for some bargains and high dividend yields, they are high dividend yields right now, but it doesn't mean that those yields are safe for the future, that they're not going to have to cut them because of the lack or the reduced revenue that they will have going forward because of the low oil prices. And Bloomberg did an article here saying shale's new reality, almost all wells drilled now lose money. Wow. And here they have a infographic, and this orangish bar is the price needed for a 30% profit, and the gray bar is the price needed for a 10% profit at different oil fields, Eagle Ford, Bakken, Permian. And the West Texas intermediate price is like $33, and you see that's lower than even the 10% profit level for these fields. So that means anybody that's drilling at these fields right now at this price is not making any profit, except for a few wells drilled by Exxon, Occidental, Chevron, and Crown Quest in the Permian basis, which can turn profits at $31 a barrel. So they're just kind of scraping by at those levels, really. A stock that I used to own, and thank God I sold it, I think at the end of the year, was Occidental. And this thing has taken a huge beating. I mean, at the end of the year it was about $40 or so. It dropped 52%. So the dividend yield on this thing now is 25%. But that's almost certainly going to be cut, because Uncle Warren Buffett wants to make sure he gets his preferred dividend, that the deal he made when he invested $10 billion with Occidental so they can do their Anadarko buyout. So Occidental lost about $1 billion last year and paid out $2.6 billion in dividends, and that was at a higher oil price. So that dividend right now looks quite shaky, as well as for some other stocks as well. Look at Marathon Oil, lost 46%, Apache 53%, ConocoPhillips almost 25%. But another thing I want to point out is here's Occidental, and here are analyst recommendations. And while most of them have this as a hold as of December, there are still 4 with a buy and 3 with a strong buy. And now, obviously, they didn't know what was going to happen with coronavirus and all that in December. But if you want a little laugh, come back in a week or so and look at these ratings again. And I bet you're going to see that these ones that had strong buy and buy, they're going to quietly change them to underperform or sell or something like that. So it's the typical close the gate after all the horses have escaped kind of thing. So it's one of the reasons why you shouldn't really rely on any analysts or any other so-called experts on Wall Street, because they're not putting your money at risk, you're putting your money at risk. So if things go wrong, they don't take any of the blame for it, your bank account does. So that's a look at what happened today in this big huge drop in the stock market and the oil market. And I don't think things are stabilized yet. There's really no really clear path to understand what kind of demand destruction we're going to have from the coronavirus that's shutting down whole countries now. Like Italy just shut down all their cities. You can't go in or out of them. So the demand destruction for oil and other things is going to be huge, and it's changing all the time. So to accurately calculate that stuff, to put a price target on where the Dow or oil or any of these oil stocks should be, is really just a coin toss at this point. So if I was you, I would not go crazy if you're trying to invest for a bounce or something like that, but don't put all your eggs in until we see, more clarity on what's really happening, or when this starts dying down and some demand starts coming back in. So that's my video. I hope you liked it. If you do, give me a thumbs up, leave a comment, and subscribe to my channel if you haven't already done so. Thanks for watching.